Back with Markets at Lunch, and you're still catching us live from the Suzlon studio here at ET Now. Time to put the spotlight on Enviro Infra Engineering. We've got the management, Mr. Manish Jain, the Managing Director of Enviro Infra Engineers, joining us on the show. Mixed set of numbers coming in from the company this time around. While the revenue was up about 49% year on year, the EBITDA has seen growth of 18%. We've seen slight softness coming in on the bottom line, as well as the EBITDA margin number that's contracted to 21.1% compared to 26.6%. So just trying to understand what's the outlook going ahead. Mr. Jain, hi, good afternoon. Good to be speaking with you. You know, the first and the most important thing I want to ask you is that the EBITDA guidance for FY27 has now been lowered to a range between 21 and 22% from your earlier 22 to 24%. Can you help us understand what is the degree of the inflation that's at play right now on the commodity front? How much have you passed through? What's the plan to pass through more of it all?
Good afternoon.
Good afternoon.
The revenue guidance and the EBITDA guidance of this 22 to 24% was for the water and wastewater segment order book, which we have lowered for the current financial year to 21-22%. Basically, it is to absorb the increase in the raw material pricing, which has happened because of the war which is going on in Iran. So basically, there's a component which will get covered through the price variation clause, which is available in the bid documents, which comes as a measure of WPI index and CPI index. But it doesn't cover the price variation to 100% extent. So just to absorb that increase in the input cost, we have given a guidance of 21 to 22% on the EBITDA side in the water and wastewater treatment segment. The renewable segment, which we started last year, and there is a revenue guidance which will come in the current financial year. There, the EBITDA margins are expected in the range of 15 to 18%. So that on at a blended level, the EBITDA guidance for the consolidated at a consolidated level looks to be in the range of around 19 to 20%. Now, if we look for Q1 FY27, our EBITDA margins on the water and wastewater treatment side has remained at 21%. And at the console level as well, it has been 21%. Now, just to understand if the EBITDA margin is at a decent level, basically there have been two aspects. One is the employee cost. Since we were developing ourselves and we were increasing our team strength in the last financial year based on the order guidance that we were having, so our employee cost has gone up to an extent of 7% in Q1 FY27. And the finance cost, this is also at a range of around 4%. So we expect this to get lowered as a percentage of sales as we will move ahead during the current financial year. Since we expect a top line of around 2,000 crores, so employee costs will also get reduced to somewhere around 5 to 5.5%, and this finance cost also somewhere around 3%. So that will give a better margin profile in the current financial.
Right, Mr. Jain, that's that on the blended levels. But tell us about this renewable segment that is pretty new. The margins are also quite low over there. How do you see the margins over here ramping up, and what's the sustainable level for margins once the initial phase is through?
The EBITDA margins as a guidance, we expect the profitability EBITDA to be in the range of 15 to 18% from the renewable segment. In the renewable segment, we don't foresee that the financial or the financial limits will be required. Rather, it will be more of the bank guarantees, non-fund based limits, which will be required for getting the orders in future and then procurement of the raw materials. So on the finance side, the costing must not increase in the renewable segment. So ultimately, at the top line, we can expect profitability to be somewhere in the range of around 12% from this. somewhere around 14% from the water and wastewater treatment segment. So at a blended level, we can expect the profitability PAT levels to be somewhere around 13 to 14%.
Okay, understood. Mr. Jain, speaking of your order book, it's at 6,700 crores right now. How much of this is executable in this financial year? How much will spill over to the next? And any more orders in visibility? How is that segment shaping up?
Out of this total order book of 6,700 crore, 2,000 crore is the operation and maintenance order book, which spans over a period of 5 to 25 years. Now, I'll say, since IPP income is also there in that 2,000 crore order book. The execution order book presently available with the company is 4,700 crore, out of which 2,700 crore is from water and wastewater treatment segment and 2,000 crore from renewable energy segment. The timeline for execution under water and wastewater treatment segment is 18 to 24 months, and renewable it is 12 to 18 months time. So if I say at the max around 2 years, the entire order book which is available in hand is going to be executed. And at a blended level, we can say somewhere around 10 to 12 years is the O&M order book. It will, at an average, somewhere around 100 to 150 crore is what will come from the operation and maintenance order in future.
Got that, Mr. Jain. Now, given that you've won two HAM projects worth around 256 crores in Varanasi, what proportion of the future water order book do you eventually want HAM projects as a whole to represent for your company?
Right now, the total HAM projects order book in the company under execution is somewhere around 400 crore. These two new projects have come, for which the physical execution is expected to start with effect from October or November. There are some condition precedent which are required to be fulfilled along with the financial closure which are going on. Going forward, there are HAM opportunities which are coming up on a continuous basis, and we see a lot of traction for the HAM projects as well. However, we would like to have a decent blend, so our debt to equity that doesn't go very high as well. So we'll keep a tab on it. Our traction will definitely be there going for the HAM project, but we will see for a debt to equity ratio, or we will look forward to monetize the asset at a right time as and when it will be required for the company.
Okay, understood and point taken, Mr. Jain. Thank you so much for your time. Good to be speaking with you this time around. And once again, thanks so much for joining us.
Thank you.